oil. Do you buy that theory? The debate intensifies as oil traders around the world are bidding up black gold. We're talking about nearing $100. But are all these worries warranted? Well, one person we can ask is Matt Simmons. He's the international chairman of Simmons Co. And Matt, thanks for being with us today.
You're very welcome.
You know, a lot of people have been shocked by this huge run-up we've seen in oil prices, getting up towards $100. I would guess you're not among those people who's been real shocked over the last couple of months.
No, in fact, I still am one of the strong believers that oil is still ridiculously underpriced.
Tell us about that. We've been hearing you're thinking $300 and it would still be underpriced. What gets you to that sort of math?
Well, I first of all start out and just remind myself all the time that $100 a barrel is about 15 cents a cup. And there's nothing else we sell in the world of any value for 15 cents a cup. And then it's also interesting to go to places throughout Europe and even East Africa and see the traffic jams that are just unbelievable. And they're paying effectively $300 a barrel at the gasoline station, and it doesn't impact their price at all. So I don't see any ceiling in the near future other than sticker shock that's going to keep prices down. And in the background, we have an extremely tight fundamental market. Our oil inventories are at record lows. We're going into this winter needing a big stock draw to get through the winter if we have any normal weather at all. There were fuel shortages that broke out in China 2 days ago. So we're in a very different oil market than we've ever been in before. Yeah,
but Matt, isn't that reflected in the jumps we've seen in oil prices, up more than 50% this year for crude oil prices? Isn't that reflecting what you're talking about in the fundamentals, as well as a lot of other things too, like traders who and speculators who are playing in this market?
I would think the fundamentals are starting to tell us the story, but I read every day oil pundits saying the fundamentals argue that oil should be $65 a barrel, and there's $15 because of the weak dollar, there's $15 because of fear factors, etc. And I think if people knew as much about the fundamentals, they should be very worried and realize that oil is still very inexpensive.
You know, Matt, there have always been people who have agreed with you on the peak oil theory, who have bought into this, but do you find that when you go places these days, you have a bigger and bigger following?
Well, I think the data is coming out so clearly that there are more and more people that are doing their homework, and so, yeah, I think a lot more people are listening to me today than there were a year ago. I wish a year ago people had actually listened, or 2 years ago. We could have done some more things about it.
Yeah, and Matt, I'm sure there's a degree to which you were correct, obviously. I mean, we've seen a run-up in oil, but we've also got consumers in this country who, as you know, are buying hybrids. We've got guys like Boone Pickens who, on this program, said he's up to his eyeballs in wind. I mean, when you do the graph, there's the supply curve, and there's also the demand curve, though, and that demand curve could tilt down.
It could, but we have to be very realistic of the fact that oil basically is mobility, and we have about 900 million vehicles on the road, and we're adding about 70 million a year. So we can add all the wind and all the solar and all the biofuels we want, but it won't make a dent for decades in the relentless growth we see for oil demand. In the meantime, if supply is peaking, we have to find some way to bridge the gap between inexhaustible growth and supply that's starting to dwindle.
Why do we think that the tar sands, once you get up, I mean, if we were at $300 a barrel oil, every single different way, I mean, I guess you could drill at the bottom of the ocean in 15,000 foot water at that point. At $300, you could drill anywhere. And why couldn't we? I thought there's more oil in the tar sands than there was in Saudi Arabia. Why doesn't it make it feasible to convert that into oil?
You know, at $50 a barrel, we opened up every door we could to basically, there's nothing uneconomical today. It's just that the other sources of supply either haven't been found, and we're out of drilling rigs, or in the case of tar sands, they're extremely energy intensive to produce, to get out of the ground. They flow very slowly, and it's a low quality oil. So what we're up against is a foot race to try to find any way possible of replacing light sweet oil with some product that scales, and it's very, very tough, if at all.
All right, Matt, thank you very much for joining us today. We appreciate your time.